And welcome. This is Derived Trader Academy. Today we are going to do analysis on boom and crash analysis. So I invite you as we do this together. Basically, I want to help us understand how we normally analyze the boom and crash indices. They normally have a movement that is so sudden. So if you're trading boom, it normally booms. Like we have boom 1000. It says on average one spike occurs in every price sell is every 1000 ticks. So after 1000 ticks, this trade normally moves up suddenly. So we are going to do analysis of boom. We are going to look then one of the crash indices, and then we shall do together one of the crash, say 99. We see how it's drawn. So basically, from what I had drawn here earlier, we can be able to just use this trend line to try to explain. And from what you can see, these volatility indices, I told you they are very easy to draw, very easy to understand their movement, so it gives you an edge. So today, being on a weekend, you can be able to maximize on your profitability by trading these volatility indices. So basically, like I told you earlier along, before you do any analysis, before you place any trade, or before you use indicator or any other tool to analyze this market, you should first look at the structure of the market. So basically, from what you can see, as I had done earlier, we have the high, we have higher lows, we have another higher low here, another higher low. So from what we can see, if you have higher lows, you know the market is on a downtrend. So like here we have a lower low, we have another lower low here, another lower low, another lower low. So basically, this market tells you it's in a downtrend, right? So I told you earlier, when the market is in a downtrend, most of the time when it is come to the downside movement of the trade, it will move in a trending way. But on mini reversion, it will be ranging, right? As you can see here, from here, this market has been moving very swiftly, very smoothly up to this point when it touched the lower trend line. But moving on the opposite side, the mean reversion side of the market, this market tends to range. So that's why I told you it's not advisable to trade against the trend. You always walk towards the trend. So basically, from here we can see the market moves to trade, then it range to touch the trend line. So from here, when you're using trend line, because they're easy to draw, easy to understand, and also they can be able to help you to project the next movement of the market. So from here, we connect this higher high and this higher low. It helps you to project the other movement of the market to the next touch of the trend line. So using now the down trend line, you can be able to connect this lower low to this lower low, connect to this lower low. You can use either equidistant channel or parallel channels, or you can just use trend line to connect the 3 points to be able to know where the market will be going. So basically, from here we can see the market moved down, moved mean reversion against the trend, touched the trend line, then continued moving down. You see the movement of the market when it's moving down, it's very, very clean, so making you to be able to project where it will run next. So if maybe suppose you sold here, and maybe from here, you see when it touches this support, the market tends to reverse or to make a pullback, then it continue to move downside. So you can maximize on this trade as long as it's on a sell. So that's why I told you don't go against this market. You just look at the direction of the market, and if it's an uptrend, you look for a buy. If it's a downtrend, you look for a sell. So from what you can draw, this drawing trend line is so easy because you connect the higher highs and the higher lows. So if you consider this to be higher high, another higher low, you connect these 2 points using the trend line, and these two trend line will help you to project the next touch of this trend line of this market where it shall reach. Using the lower trend line, you connect the lower lows, the two lower lows, to help you to project the next lower low. So these two lower lows, this one and this one, it helps you to know where the market will be landing. And from here, if you are selling, you can come out of the market or take your profit from here. So from here, you just wait for the market to touch this trend line so that you can continue selling further down. So from here, for you to know whether the market will be ranging or whether the market is reversing, you can consider this pattern that is here. So from here we expect the market to be ranging until it touches this trend line, but from here we can see an inverse head and shoulder. This is the head, this is the shoulder, and this is the shoulder. This is the left shoulder and this is the right shoulder. So from here, when the market pulls back from the trend line and forms these reversal patterns, the market will come to the neckline, right? So from here, from the head to the shoulder, the market will if you maybe took the trade from here, you will come out from this neckline, from this point. Let me draw it using the rectangle pattern so you can be able to note it. Right. So if you took the trade from here, and you see this is an inverse head and shoulder, so if you take this trade from this right shoulder, you were able to come out of this trade from this neckline, right? So therefore it gives you an opportunity, in as much as it is an in reversion, you can be able to maximize on this trade. But if you are a trend follower like I am, so you wait for this trade to reach here to the neckline, then you'll be able to do a sell up to this point. So if you take this trade from here and you put your stop loss to be somewhere there, and you take profit to be up to this point, therefore that gives you a very good edge, a good opportunity to maximize on your profitability. So basically that's what that's how we be able to draw these boom and crashes. They normally follow this technical analysis at 100%, like I've been telling you before. So therefore this gives you an edge to make more profit while you're trading boom and crash. And you see their movement is so swift, it is very predictable using just trend line without using any indicator. So let's lower down to our 4 so that you can be able to understand how now the movement of this market. So this is the hour 4. Previously we were on a daily trend line, and we are seeing how it is moving, but on our 4 we can see how the market is moving. This now is on a mini reversion. You see it is still moving in patterns. So if maybe you are to take this trade, if you are really a mini reversion, you just take this trade from here. You see it is still moving up, and from here you'll be able to maybe take a buy and come out of this trade up to until here. So do not wait for this market. Let me take out this, sorry, let me try to draw it well so that you can understand how you're able to draw it. If you take this trade, say from here, do not wait for this trade to come up to this point, because here we have a larger trend line, a daily trend line that is telling you after the market reaches here, it will definitely reverse and come down. So this is a trap most people don't understand, especially the beginners. If you see this trade reaching here, you see this setup is so clean, everybody can see. So when you see a setup so clean, you need to know that this market, in as much as it is clean, there are traps that are set, because this market is 100% technical. They are not fundamentals. So they use technical traps to lure you into maybe making a long-term sell. But if you buy from this point, you come out of this place, and from here you cannot sell because you are not against the trend, and you definitely maybe take profit up to this point all until it touches the down trend rate. So basically that is boom 1000, a simple strategy that you can use to maximize on your trades. So you see its movement is so clean, and from this everybody can draw. So you don't need any indicator here for you to know where to buy or to sell. There are other maybe chart patterns that you can use, continuation and reversal patterns. Like I told you, this is inverse head and shoulder. An inverse head and shoulder, it tells you it's a reversal pattern. We have double top, double bottoms, that's also there. They are reversal pattern. But continuation pattern, we have the pennant, we have the flag pattern, we have the cup and handle, we have the wedge. But on this, as far as the market has not touched here, for us to identify the reversal pattern, we cannot use them. You cannot use them for now. But if the market is here coming down, we can identify flag pattern, we can identify the cup and handle, we can identify the pennant for us to ensure that we maximize on that trade. So basically this boom 1000, if you are trading this trade or this pair or these indices, then you can be able to wait for it to reach here, and from here you can be able to make a sell up to this point. So you can wait for this, you can put it in a checklist, and when it touches here, then you can maximize on it and sell as much as you can. So from here we can go to say crash 500 also. So again, this is crash 500. I told you we are analyzing boom and crash. So this is crash 500, and as you can see, like I told you, this market has no complication. Its explanation is as simple as we can see. So we just consider the higher highs and higher lows to know the first structure of the market, to know the direction. So we can see the higher highs, higher low, another higher low, but it is not yet touched well. So here we have a lower low, we have another lower low, another lower low. We connect the higher highs with the trend line. So this market had not touched here, so we were waiting for it. That's why we had even made a buy, because there is a mean reversion, but we took a buy here and we were coming out of this trade when it touches the upper trend line. So again, we connect the lower low, this point, we connect to this point, we connect to this point, to be able to help us know the direction of this market. So basically, when you look at this trade, you can be able to know the next movement of the market. So from here, when it touches here, we are definitely going to sell and come out of this trade when it touches here. Do not wait for it to touch here. You can be patient enough, but when it reaches this support, you can be able to maximize on this trade. So basically, drawing or analyzing these boom and crash indices, it is so simple. Use trend line. Do not use any other complicated things. Like we can see, this is a wedge. You see the market is moving up, down, with and it is minimizing its movement. So it will eventually come and touch this point, and it will be coming to a point like it's ending in a wedge form. So when you're drawing these indices or doing this trend line, you're able to connect the higher highs, the higher lows, the lower lows, and lower lows, to know the next direction of the market. From there, maybe I will teach you on how to identify the reversal and the continuation pattern, but that is a whole lot of a topic that you can be able to learn. But when you're trading boom and crash, it's a very simple way of drawing them, and from there you can be able to, you see how simple it is. You see there are no sudden movement here like we have in other pairs, maybe in currency. The movement is so sweet, so clean. The moment you draw your trade well, then you can be able to maximize on it. So let's go to our 4 and see the movement. You see already this trade, we are in this trade already. We took it from here. You see this is a flag pattern, and this is a continuation pattern. Like I told you before, we took this trade from here, and our take profit is once it touches this upper trend line, then we can be able to come out of this trade and ensure that we sell up to this point. So this is a mean reversion movement of this trade, and from here we can see connecting just the lower highs, connecting the higher high, connecting to the next higher high. But you see, this is now the trap, because when the market touches the upper trend line, it will not go further to this trend line. That's a trap that many don't understand, because when they see a crane setup, maybe you had only drawn our 4 time frame setup alone, but you didn't draw the daily time frame to know whether the market will be going further from this point. So this trend line, the upper trend line that is in daily time frame, it will help you to know once the market reaches here, it will start reversing. Maybe it can reward maybe some buyers to continue buying, continue holding their buys, or maybe sell from here. Maybe they think the market has been broken, but when it reaches here, you definitely see it moving swiftly down, because it has trapped many buyers from this point, maybe thinking the market will come up to this point. So that's a trap that you should be keen to know. So basically from here, we wait for this market to reach here. We almost hitting our take profit. Our take profit is around 32.30. 32.30 is a Raj quota. I'll be teaching us about the Raj quotas in volatility indices. We have Raj quotas in currencies, but again we have Raj quotas in volatility indices. So from here, we wait for this market to come all the way down to this point, and you can be able to maximize on this trade. So simple, easy to understand, easy to project, easy to trade. We don't have news. This is the weekend that you can be able to maximize on our trade. So from there, I want us to do one trade. These ones I had drawn it before, just an explanation. Then we'll draw one setup with you, and I hope you will understand more as before. Maybe we can proceed to putting our trades and to know which one is buying or which one is selling. So let's proceed and go to crash 99. So here we have crash 99, and you can see we can see the graph, the crash 99. So if you have crash 99, you can open in your PC so that we can do this together. Previously we had boom 1000, we had crash 500, now we have crash 99. I want us to analyze these indices, and we see how we can be able to identify where to sell, where to buy, whether to wait. So from here we definitely go to our style of checking the higher highs and the higher lows. So you see the market was trending, ranging, trending, ranging, trending, then it continued trending further. It formed a deceptive head and shoulders here, and then continued going further. So from what we can see, we are going to use trend line to identify the movement of this market, and from here we can see there we have a resistance, and this resistance will help us to understand that this market is a form of a flag pattern. Yes, let's draw it. Let's draw so that we can be able to understand it further. From here, let's try to draw. I hope it will be easy to draw. So that's another movement. So let me just explain. So from here you can see the market started ranging, and from the ranging you can see it formed a flag pattern or a rectangle. You see a support and resistance. You see, but the moment this trade reached here, it broke our flag and retested. So it is very important to know, when you see a market moving in a range and it breaks the range, you see it has been moving a buying then selling, buying and selling. Then from here the market reached here, it tried to buy, but the pressure was so low, then it broken and retested that the same region. So from here, once the market retests this region, it tells you the pressure to sell is so high, and from there we can see the market continued to fall down further. So from here we can consider this our high high, then we have our higher low, we have our higher low further, and from here we can say this is our lower low, this is our lower low, our lower low, our lower low. So from here we can be able to use this portion to draw trend line, because this market is trending, it's not ranging. If it was ranging, we can use support and resistances, but the market has broken this movement, this flag pattern, and continues going further down, then we can be able to use trend line to try to identify its movement, its current movement, to know whether to wait or to buy or whether to sell. So let's go and use trend line. So you can pick trend line from your tools, and we can put it there. You see where we are starting from. Yes, we can connect the two higher lows, sorry. Connect there. We can expand our graph a bit. So we use this to draw here. You see, we are connecting only the lower lows and the higher highs, and from what you can see, because this trend seems to be, the graph seems to be small, we can go to our one. So we can see the hourly movement of the trend, and so previously we had our 4, but here we have our 1. You see it's clearly drawn. We can go to study it now. So from here you can see, from this point the market has been moving, touched there, it continued to allow me to draw it well here, so that you can touch the higher highs, the lower lows. So yeah, that's the movement clearly. So now from this point, if you connect this point and connect this point, you can be able now to project where the market later it will touch. So as we can see from here, the market is ranging, heading to this trend line. But now from here we can see the market touched here, it has touched these two lower lows, and continued to touch these two lower lows, and continued further to touch another lower low here. So therefore it tells you this market is on a long downtrend. So when you're drawing these indices, or you're doing crash 900 trend, it's so easy, or so easy to understand where the market is moving. So from here, even if you are a novice, you are a new beginner in this market, if you draw these two trend line and you know exactly where to draw them, then you don't need anything to tell you where the market is going, where to sell, or where maybe to come out if the market is not going the right direction. So from here we can see the market touched here, it touched here, and then going further down. So in this market, you only sell, do not buy in this downtrend. So from here, you see the market touched here. It tried to go and touch the trend, but it never touched. So it touched up to this point. So that's why I told you it's good to be a trend follower. So from here, if maybe suppose you find this market here and you sold here, and you only come out of this trade when it touches the downtrend, and you see it touched twice, giving you an opportunity to come out of this trade. So if you are really ready to trade these boom and crashes, a very simple strategy is using trend line. Trend line, they are easy to draw, easy to understand, and easy to can be able to project the movement of the market. So from here, you can see we touch the lower lows. Once you have your downtrend line, you first start with if it's a downtrend, you start with the upper trend line. You connect the higher highs to the higher low, and from there you use the downtrend line. You connect the lower lows to the next lower low. From there, you can be able to know where, because this market will always move in a channel. So you see the market is moving up, down, down, it moves then up, it moves down, it moves up. And you see, I told you the movement, because it's on a downtrend, the downtrend movement seems to be so swift. It is so soft, but the mini reversion going against the trend, it goes in ranges. So you cannot be able to maximize your trades or your trading when you're doing the mini reversion or against the trend. So basically that's how we will draw crash 99. You see, we have just picked any, and we're able to maximize on this trade. So if you are there on a weekend and you want to trade, wait for this market. It may not take so long. Wait for this market to touch this upper trend line, and ensure that you sell here and come out of this market from this place. So this market, they are profitable because they don't stay so long, and their movement is so high, and there are no news here. You don't wait any news from Trump, from anybody. So once you sell from this point, you have to come out of this trade from here, from this support, because it's also good to take partial profits, and from here sell to this point, and you made your weekend. So you don't have to wait for weekend for weekend days to start from Monday, that you can be able to make a trade. This is a very clean trade, and plus others, we have a lot of volatility indices here that we can maximize. We have volatility 50, we have the boom and the crash. All these you can be able to maximize on them. So you don't have to wait for weekends, for weekdays for you to start trading. So this is a simple way of doing crash and boom analysis. So if you're there, you've not understood anything, you can just tell me through the comment section and tell me which part you've not understood, so that I can be able to explain it further. So I will also urge you to subscribe to our channel, so that anytime we drop a video, you can be able to be notified, and you can be able to learn more as you become profitable in this market. So that's for today. See you in the next one.